Who's left holding the bag if there's not enough ticket revenue coming in?
Well, it really depends on the structure of the financing. So if it's a private financing where the revenues of the stadium are there for bondholders' benefit, then clearly if you don't have any fans in the stadium, there's clearly a revenue impact. For the public side, where you had states and localities who have financed these stadiums, the revenues will continue to flow. It really depends on a political sort of understanding with all the pressures at the local level. To be able to pay for a stadium that's empty is a pretty difficult pill to swallow for politicians.
Right.
So while the revenues will flow under the public side, the politics get a little messy. On the private side, where revenues are there, you have to look at the structure of the transaction to really get your comfort level on what the risks are.
Yeah, so let's start with the bondholders. You know, this is an investing show after all. So if you're who for the most part is exposed in terms of stadium finance debt, and who stands to lose the most if these deals have to be restructured?
Sure. So, I mean, we actually think that, bondholders are typically institutional investors, though you will have some retail investment dollars. After all, a lot of this is tax exempt and in the municipal market, which is a highly retail market. But really, the team owners are really, exposed in a certain extent, because just like a house is one of the biggest assets for a person's balance sheet, these stadiums are pretty important to the valuations of the teams. If you look at most recently, Forbes released the valuations for NFL teams, and most of the top five in terms of valuations have had recently reconstructed or new stadiums. So these revenues are pretty important to the valuations of the teams, and the owners obviously are pretty focused on that revenue stream. So bondholders are definitely on the hook, but there are a lot of belts and suspenders to these transactions. We have seen strikes, for example, which typically these transactions do have an ability to maintain cash flow for a strike up to a year. So there are some supports here. But at the end of the day, this pandemic, we're not sure how long it goes, and we're not sure how the impact's going to play out.
So I can see, the best case scenario is this is akin to a strike. Next year, all the stadiums are full, nothing changes. But what happens if people lose interest, don't show up the way they used to? Team owners aren't getting the value that they thought they would be getting. What happens then?
Sure. So a lot of these stadiums were constructed with this concept of contractually obligated income. So you have naming rights, for example, that are long-term contracts. You've got suites and luxury suites as well, luxury seating product generally overall. So that revenue is going to continue to flow. The issue is, the stadiums in terms of concessions, some of the impacts with respect to, workers that rely on stadiums for their employment. That's certainly something to be, monitored. But generally, these deals do have some ability to withstand it. Going forward, we had already seen that the technology, increases at home have, moved people to the couch from in the stadium already. So, it's going to be something that bears watching for sure.